money market fund. What's the minimum that I can invest in the money market? How many withdrawals can I make from the money market in any given month? Is the money market fund regulated by the Capital Markets Authority? Hey there! Welcome to Dada Finance with me, Mama Bima Kenya. Today we are learning the A to Z of money market funds. Grab a notebook, tega skio, class is in session. A money market fund is a unit trust fund or a collective investment scheme which invests in highly liquid financial instruments with short-term maturities and high credit quality. I know that statement is quite loaded, so allow me to break it down. So you're probably familiar with companies that we call fund managers or asset managers. And to name a few, Britam Asset Managers, Sanlam Asset Managers, CIC Asset Managers, ICA Lion Asset Managers. In Kenya, we have about 23 registered assets or fund managers. So now the fund manager manages these unit trust funds. And in the case of the money market fund, they bring together many investors. So they bring me, Mama Bima Kenya, and I invest 100,000 shillings. They bring a young student who invests 2,000, okay? They bring a SACCO to the table that brings 500 million deposits, a church some 50 million, and they put this money together. They put this money in what we call a pool. Then they take the money and invest in various asset classes. So now in the case of a money market fund, the fund manager invests in government, treasury bills, in fixed deposits or call deposits from reputable banks, and they also invest in what we call commercial papers from corporates, okay? And they ensure that these investments have short-term maturities and high credit quality. So at the end of the day, the average return that the fund manager gets, they pay themselves what is called a management fee. Then they give us now the net return. So for you as a money market fund investor, your fund manager will probably declare that your annual yield is 9.44%. Okay, so now that's your take home minus withholding tax. So you see that with a money market fund, you get to enjoy what we call a wholesale rate of return. Okay, because me with my 100K, the student with the 2,000, the SACCO with the 500 million, we all get to take home the same rate of return. So if it's 9.44%, there's no bias. Everybody takes home the same rate of return. So in a nutshell, that is how a money market fund works. So now I want us to look at what are the benefits for investing in a money market fund. Benefit number one, competitive rate of return compared to traditional banking products. How much is your bank, giving you for a fixed deposit? 5%, 4.5, maybe 6 at best, Now, if you compare that rate with what you get from a money market fund, reputable funds currently are giving, 9%, they're about 9 to about 9.4% return. So why would you fix your money at almost half the rate that you would get with a fund manager? At the same time, if you also compare the money market funds with even the government treasury bills, currently the government 364-day T-bill is at 7.661%. Okay, so why would you fix your money for a whole year at 7.661 while you could invest in a highly liquid fund that would give you an average of 9.4%. Benefit number two, your principal is protected. Okay, so now with the money market, the initial amount that you invest, okay, and the interest that you have accrued up to a particular date, that is protected. So the fund manager cannot come back to you and say, Mama Bima, the market was performing poorly, you know, the rates have gone down. No. So what you have invested is protected. What fluctuates, albeit very slightly, is the rate of return. Benefit number 3 is compounding interest. You get to enjoy compounding interest. So Albert Einstein said, compound interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, pays for it. Okay? So now with the money market fund, the interest that you earn in a particular month is now added to your principal, and on the next month, the bigger figure, you know, the interest plus principal is now what earns interest. So compound interest ensures that your investment is growing at a faster rate compared to if it was to be just a simple interest. Next benefit, the money market fund is highly liquid. Okay, so anytime you need your money, within 2 working days or so, you will have the funds back in your account. And nowadays, you find that many fund managers have really embraced the digital way of doing things. So you can transact from the comfort of your phone. You just download the app of the fund manager that you're using, and you're able to top up into your fund or withdraw. And anytime you send your instructions, whether via mail or you do your withdrawal via the app, in at most, 2 working days, you will have the funds back. Okay. Next benefit, professional management. Okay. So in a fund management company, you find they have an investment team that comprises of like a chief investment officer, portfolio managers, researchers, dealers. All these people are there just to manage your funds. They are industry experts, so even the decisions they make, okay, they are highly intelligent and also well researched. So you get to enjoy all that. So there's no stress for you in determining like which treasury bill should we invest in. No, all that professional management is done by the team at the fund management firm. So for you, all you do is wait for at the end of the day to get your rate of return, a competitive rate of return. The money market fund is also flexible. Okay, so you can top up as many times as you wish. So initially you could start at whatever amount you're comfortable with, and you can always top up. So you could use your money market fund as an accumulation pot. So you have some 3,000 in your M-Pesa, and you feel if this money stays here, I'm going to spend it, I'm going to do some impulse spending. Okay, so you can just get onto your app and top up your money market fund. Iondoke. Okay, so you find that the fund is very flexible. You can top up as many times as you wish. You can also withdraw as many times as you wish. However, there's a disclaimer here. With the money market fund, the first withdrawal in any given month is free, but any subsequent withdrawals within that same month, you will be charged. And you see the charges depending on the fund manager. The charges range between 500 shillings to 1,000 shillings for every second withdrawal and up. So I always advise my clients to plan themselves ahead. You do not want to incur all these unnecessary charges. So you plan yourself ahead and ensure that in any given month, you only withdraw once. So that's it for the benefits of the money market fund. So now I want us to look at who is the ideal client, for a money market fund. Number 1, a client who is risk averse. Okay, you're probably saving up for your emergency fund, or you're a retiree. This is money that you do not want, any risk. If your risk profile is very low, a money market fund is ideal for you, because remember we said your principal is protected. So money market funds are not like, say, the equities market, where one day the share price could be up, the next it's down. So if you are risk averse, money market fund is good for you. Also, a client who is looking for a parking bay, for their cash. Let's say you have an ongoing construction. You're building a house, okay? And you're probably at the foundation level, okay? In total, you have some 5 million. The foundation will probably take up 1 million shillings. You see, you could put the balance, the 4 million shillings into your money market fund, park it there for the money to be earning you interest until the point where you will need it, and then you go and withdraw it. So a money market fund is a good parking bay for money that you are not in need of right now. Instead of that money lying idle in a bank account and earning you no interest or very little interest, then the best alternative would be a money market fund. Also, a money market fund is an ideal accumulation pot. You probably have an event, maybe a wedding that's upcoming, or you're looking to go for a rasho, go on a trip, with your friends. So you can use the money market fund to build up to the amount that you want to raise, where you do maybe monthly contributions. So ideal client, someone who's risk averse, someone who's looking for a parking bay, and someone who's looking to accumulate money up to a particular given figure. Let's look at how can you invest in this money market fund. So you can invest as a single, as an individual investor, or you could open a joint account with your friend, maybe in your chama. If you're in a chama that's not yet registered, you could nominate, a few of your members to open a joint account on your behalf. You could also open a money market fund for a company, a welfare organization, a registered chama, and so on. So pretty much everyone can open a money market fund. And I understand that lately, there has been some concern when it comes to our capital markets financial instruments. And in the recent past, we've seen clients lose out money, people really struggling to probably liquidate their investments. So what I would advise is that before you invest in a money market fund, get a credible, independent financial advisor like myself, Mama Bima Kenya, because then the advantage that you have is I have worked in the fund management space for many years as an employee, and right now I work in this space as an intermediary. So I have a lot of market intelligence, and I'm able to advise you on which are the best fund managers. We are able to strike a balance between security and the rate of return, okay? Which is very important, so that you're not just chasing the fund manager, say with the highest, rate of return, yet they are a shaky brand. So with a good independent financial advisor, I'll be able to take you through the stability of the company, who is the custodian of that fund manager, because remember, the custodial bank also matters. So we are able to look at, for maybe the top 3 choices that I've proposed for the money market fund, who is the custodial bank behind that money market fund? Also, who is the trustee? Because remember, the trustee is the institution that plays the oversight role on the fund manager and how the fund manager is investing and adhering to the laid out regulations by the CMA. My call to action is start small, start now. The money market fund is a very easy investment for you to start your investment journey. So don't lose out on a competitive rate of return by keeping your money just maybe in a bank account, in a current account that's earning you 0 interest, while you could be enjoying competitive rates of return of up to 9%. Thank you for your time. That's all we had for today's class. Please remember to subscribe, like this video, and share it with a friend or a colleague or a family member who may benefit from the discussion. You can reach me on the contacts below for more discussion on investing in money market funds. Bye.